Hello people, welcome back to my channel. Today's video I'll be sharing with you guys how to use parallel trend lines to catch very high probability trading setups where you're able to combine price action, support and resistance to get very good trading setups, right? So we are going to be scaling to multiple time frame analysis, and we are going to scale from multiple time frame analysis to get very high probability entries where you can catch good setups trading volatility 75 boom and crash, Nasdaq, gold, forex pairs and all of that, right? Okay traders, welcome to my channel. I am full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX 75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. Now, in order to get a high probability entry setup in trading any market or any instrument, it's better you do a multi-time frame analysis, right? Where you go to bigger time frames like the H1, the H4, or let's say you go to bigger time frame like the daily, the H4, right? Before you drop down to the time frame in which you are trading. Okay, now if you look at our chart here very well, you are going to see that we have a downtrending market that just turned into an uptrending market. All right, now if you look at it very well, you're going to see two parallel lines or two horizontal. Let's say we have a resistance and a support here, which is as a result of a multiple time frame analysis, because basically price will sometimes create reject to measure zones, like let's say measure a resistance up or measure support down. Okay, when price react to these measure zones, let's say in the daily time frame, it's going to form something like a ranging market. Okay, maybe it hits, okay, it forms a ranging market, and if you drop to smaller time frames, you realize that this ranging market will form what we call a trending market in a smaller time frame. All right, and with that you can catch very good trading setups or till when it gets to the zone up. All right, but if you don't do a multiple time frame analysis, you will not know when the turning point comes, and that is exactly what happened here, right? You might be selling, and when you get here you still continue selling without knowing that price will react to a zone here and turn to an uptrend. Okay, now that's exactly what will happen here. Okay, so let's just clear this off a little bit so that we can demonstrate and you understand the concept fully, right? Okay, so now let's go to the daily time frame. All right, let's go to the 24 hours, which is the daily time frame. That's why I want to do our multiple time frame analysis. So if you look at this, you are going to realize that we have a powerful ranging market, and this market has been creating zones rejecting and rejecting. So when it comes up, it gets rejected at this zone, all right, and then it continues forming like that. That is for the daily time frame. Okay, now it's obvious that when you see price heading down to this zone, you should know that most probably it's going to turn to move in an uptrending market. So if you drop further now to H4 time frame, you are going to realize that price will start forming a trending market. All right, sometimes you see a trending market. If you see this move in the H4 time frame, in the 30 minutes time frame, it will be a complete trending market, right? So basically what you do now is you drop now further to a smaller time frame where you might be considering your trend lines, you might be considering your whatever. Now you can see that looking at smaller time frames here, you can already see that we have a complete trending market. But before then, you see that here we had a down trending market, right? And we connected like that. That was very beautiful. And remember, for those people who do not yet know how to trade trend lines, what we do is we usually connect these highs, right? You connect the high, let's say this is where price was, you connect this high to the next high, right? And then you drag down. Okay, now that price has rejected once and rejected twice, what happened? Price will probably be coming up the third times to find this to be what? A resistance. All right, in this situation you wait for price to come back, and when price comes back the third time, that is where you are going to be shorting, because from there price has proven to be rejecting in that zone many times. So your stop loss should be above that zone, and then your target should be at the previous low, because at the main moment this is where we had our previous low, right? This is where we had our previous low. Okay, so you place your target there and then you wait for price, right? You can see how price move just by understanding this simple concept, guy. You make sure you get the touch, this touch, you get the touch, and you get the touch. All right, now you have already done your multiple time frame analysis. Remember, you have plotted this zone, you have plotted this zone in the bigger time frame. You know that we have this zone to be our key support, this will be our key resistance. So as price keep coming down, what happened now? You don't want to be selling here because price has already tapped to this zone here. All right, and because you know that in the bigger time frame, when price tap to this zone, it's going to continue or turn. The trend is mostly likely going to turn and start going up. So from here, you should look forward trading breakouts. So you should only be trading, looking forward breakouts, because price should be reacting to a key zone now here. All right, but someone who did not do a multiple time frame analysis will go on to start shorting here without knowing that there is a key level here, right? So I'm teaching you guys how to increase your probability of winning, increasing your win rate. So you see that from here now, price started, forming a higher highs from here. Okay, it forms higher highs, a little comes down now and taps to the zone permanently, and then you see that it formed another zone here, okay, which you can see draw out. But this time around, you should only be waiting for price to break through, because it has tapped completely into this zone, and as it is coming back, you don't need a prophet to tell you that price will most likely break through. So you cannot be selling here, okay, because of the information you have in your multiple time frame analysis. You should be looking for instead a breakout to be entering. Anyways, we are not focusing on breakout in this situation, right? So you just wait now for the trend to change, and then you start looking for buy opportunities. Now you see that price has created a major swing high, and then it has created a swing low, right? So you wait. Now what you simply do is you connect the low, right? So you just connect using the same concept. You look at this obvious high. If you look at it, we have this to be obvious high here, right? But if you use this here, it's going to be too sloping. This will not be a very good trend line. It will not be sustainable. Like I always teach you guys, look for a trend line that will be sustainable. It could be like this, all right? So it could be like this, and then you just connect, or maybe you can just connect to be like this, so that it should be very gentle, and most of the price will come back to reject. Now you see that once you connect like that, okay, what you do now is you identify, because if you look at this zone, you see that this was a support zone here, this was what, a resistance zone here. Sorry, price got rejected. As price created this high, came, got rejected again before breaking through. All right, so now as price has broken through with a low of price action, normally this now becomes support. So you just connect like that, it becomes support, and as price pulls back to this zone, most likely it's going to find support. So what you do now, you identify this to be a high probability entry zone, because it is at the same level where we have what, the trend line. So now there is a probability of you expecting that price will leave from here, come, then reject here, and then shoot up. Okay, so entering here will be a very high probability setup, not just giving that you have many confluences. You have the trend line, you have the resistance zone, then you have price reacting to a bigger zone in the higher time frame, and you see that most likely price is going to move up. All right, now you can use this parallel channel here. You can just use the trend line from the other side. You just connect, okay, you drag, okay, because from there now you see that price will most likely be reacting to this channel. When it hits top, it comes back and pulls when it hits. So you can use this to be an entry, and then up there you can use it to be your target, right? Just as simple as that. And let me show you guys, you can now scale further to, let me say, the H4 time frame, and identify the zones where you should be taking your targets. Now if you look at it in a higher time frame, this is a major key resistance zone here. Okay, and where we have price currently, price has broke through another major zone here, and we have a higher probability that price is going to head to this zone there. Now for people who are swing traders, you can look for one entry here, and then you want to be targeting up there, but you don't want to be too greedy, right? You don't want to be too greedy, because that will give a very high risk to reward ratio, and if only you have the patience to be able to hold trades, there is a possibility that you can maybe catch a trade like this. Okay, you hold like that, maybe like that. There's a possibility of getting that kind of high win rate, or that kind of a high risk to reward trade, where you'll be able to catch that big move there, right? So that's basically how you can catch high risk to reward ratio trades, knowing where to enter, knowing where to place your stop loss, knowing where to place your targets. But you don't want to be greedy here, or you don't have the patience to hold on for trades for too long. You can enter, and then you target this zone here, which is also the upper channel, or you target this zone here, right? You can still target this zone, which is the previous high, like I showed in the other example. You just exit here, all right? You enter here, your stop loss below, and then you exit there. So that is how you can target this high probability trading setup. But remember, trading is all about probabilities, and anything can happen in the market. So you only try to increase your win rate and probability so that you get high trading opportunities. And when you have a losing trade, remember our risk to reward ratio is always good. Even if we are using this zone here, our previous high, to be our target here, at least that's still a very reasonable risk to reward ratio, in which, no matter how you get hit, you are going to, each one single trade that you win, you are going to end up being profitable, because you are going to recover all the few losses that you had. That is how you should approach trading and get high risk to reward ratio, and in the long run you are going to most likely become consistently profitable. So basically, that is what I have for you guys today. Thank you so much for watching. I hope you find the video helpful. Please give me a thumbs up, click on the subscribe button and notification bell, so that each time I post a new video, you are going to get notified. So make sure you join our Telegram channel. I'm going to drop a link in this video description and in the pinned comment down below, so that you click and then you also get notified on anything that will show up. So see